Good afternoon and welcome to OptionsTender, the weekly edition here we're doing on Sunday. I hope you had a wonderful weekend. It's November 16th, 2025. So we have a lot of information to go through. We have a lot of things coming up this week. We have to watch what is the market telling us. Now, we're going to do a deep dive into technical analysis on SPX, and we'll check out NDX. And then I do want to bring up IBIT, the ETF of the Bitcoin, and I think we're getting into a critical area. So I'm going to start putting IBIT into the regular daily analysis. So I do want to hit that up this weekend just for a second, just to kind of initialize that, and we'll continue to every once in a while put MJ on there because I think MJ is coming up to a good spot too. But we'll do that one later as it comes a little closer into a wonderful buying position. Okay, so let's see here. We're looking at market value to GDP. It's never been wrong. We're over 2 standard deviation above it's just a mean reversion kind of play. We're going to get a recession. No matter how you look at it, it's just in the near term, how are things playing out? So is the top in, or do we have one more to go? So the government's open. We had to sell the news after the ramp that we had there, anticipating a government open. We now are starting to sell off. There's a few people that still think that in the very near term, we go get a new high. Is it possible? Of course, but we'll have to see what the market tells us. I think the probabilities that we go lower from here. And I'll show you exactly how I'm looking at it in a little bit. So make sure you stick around for the rest of the video, or you can skip forward if you want. So the weekly candle, we have a reversal. We'll look at that. We have DJX is hitting off historic 2007 trend line and reversed hard. And so that one has, we'll look at that candle as well. All right, now in the Discord, it's 99 cents to become a YouTube supporter, the member, the starting position. And that comes with the Discord trade alerts and the cheddar flow data. And the cheddar flow data has really been helping us out. I'm so glad that somebody recommended it in the Discord. Thank you very much. You know who you are. And I was able to put that bot in there. So we're learning really special levels that have become critical, and we can watch those levels play out with this data that we have here, especially the dark pools. That's what I'm really intrigued in, is how well the dark pools are introducing big levels here. So coming up this week, we have FOMC minutes. We're looking at that. And if you're an individual analysis member, it's $4.99. You know exactly how I feel about FOMC. You know how I feel about the Fed. I have a video out now, post it on a card and at the end about my feelings on why the market is going to get their rate cuts. Okay, everything's pointing at inflation going higher, stalling on the rate cuts. That's what all the chatter is, but the market's going to get its rate cuts. So NVIDIA earnings are on Wednesday. After the FOMC minutes are on Wednesday. Employment data, that's coming out. We're catching up on some data, I believe, on Thursday morning before the bell. So you see that there's a cluster of catalysts there. So let's see where price goes before this catalyst, and then we probably have a nice edge on what's going to happen next. Okay, so our options expected move, since it's options expiration this week, we have 165 points to the upside or downside. No bias from the options market, so keep an eye on that. Here's your levels. That's on SPX, and then I'll give you the SPY options expected moves as well. So if you're the individual stock analysis member, you already have the video for the options expected moves for all of our individual names that we follow. And please let me know if there's any other names that you want me to add on that. Okay, so let's jump into the charts. We have our primary wave 1, intermediate wave 1. That's where I think we're at, just starting. And the alternate scenarios are bull scenario, where I still think we go lower, but we have a wave 4 before getting new highs here. Okay, so we have the monthly chart here, and we always like to start off with this because 1929, we talk about it over and over. here's our trend line. Now, some other charts, I know that with TradingView, you have these hybrids of log scale, and those things are adjusted, and those charts are pointing at this trend line at being the top right now. Ours is fully log, and so you have 1929, you have 2000, and you have the 2025 right here. So we're showing a throw over at this point. Let's see what happens with price here over time. Now, it's a monthly time frame. It's going to take plenty of these videos to show that we're probably going to end up back underneath here. So, but I do like to point that out anyway. So here's a look at the moving averages. We are now any second, anytime now. So we're still well above that 8 EMA. The momentum's up. The trend is up. That's what that's telling us. Are we just going to come back to the 8 EMA and then head higher? That's kind of the question, right? So we constantly look at these D marks, but over the monthly time frame, again, these are going to take plenty of time to play out. And it looks like we're going to get our 13 count. We'll have to see. We're at 11 count so far. There's no setup here yet. We have a 6, 11. We'll be looking for the 13 or the 9 and or the 9 count for any sort of kind of like this here. There's a 13 with that arrow pointing in a 9 right there. For any type of reversal setup, we don't need those to get a reversal, but it's always nice to see those if there's exhaustion there, and we can that will add on to our theory. So here's our look with the RSI. We have our 3 peak here over time. There's tons of divergence. It's calling on a full out recession. This is going to end in a big sideways to down move. The reason why I say sideways, because if we have stagflation, then that can be like the 1970s. And I've done that in past videos. It looks kind of like this here, where we went sideways and we had basically 2-3 bear markets within a pattern. Okay, so we have our slow Stokes getting that curl. We don't have the ultimate sell signal yet, but we're getting that early crossover for a sell. And also the MACD, we had those divergences. We're at our upper, so this is the MACD V. We're at our upper boundary with divergence right here. We don't officially have a sell signal yet until you see these red histograms come out. And that was a whipsaw there where we actually got a lower high. So you can see this next one is likely to really play out. So keep your eye on this one. On the monthly time frame, we have NDX. So on NDX, we'll just we'll shoot through a couple of these here. Your moving averages. All right, we're holding on to that trend for now. Momentum is up, trend is up. DMARC, I don't know why it does that. It takes a little time to. Here's your 6 count. No setup there. And all right, getting your crossover here. Of course, negative divergence, just very similar here. And divergence in the near term too. So very similar to SPX, nothing different there. So let's go to the weekly time frame and we'll back it up here. We'll go back to SPX. So I don't usually do both of them, but I like this. And I do like this trend line here. We have a nice trend line flowing all the way up. And so a traditional look, we do have a channel top as well. We have 2 points down here and 2 points up here. So that's holding it for now. Is that, are there 5 touches on there? No, but we're going to see where that holds us. And then we also have this trend line holding 3, 4, I believe 5 different points and reversing off of that confluence right there. And big sell signal on the weekly, and that's where we got our confirmation. We couldn't get continuation at this point, but I do think we're going to rebound just a little bit. We don't have to, and again, I'll show you this on the lower time frame, and then after that, we'll form. We'll have a topping formation, and then we'll look for follow through after that. It's going to take a few weeks to play out. So here's your moving averages. That's what we're just scratching to hold on to at this point. We're just this has been holding this entire move up here, I think, and you'll see this on a lower time frame. I think our initial move is going to hit this 20 moving average. It's super important to us. If we break this 20, that's when we're confirming that our downtrend on the weekly and the higher time frames for our style of swing trading is intact. But I think we'll get to this area and we'll get a reaction, a nice big bounce, and then head over, roll over and fail from there. So we'll keep an eye on that. DMARC, we have our 13 exhaustion count. That's exactly what I'm talking about, right on that reversal candle. Nice setup on the weekly. All right, in this weekly time frame, you see we have these divergences here. I don't have these marked on the weekly I have marked on QQQ, but you can see all the divergences happening throughout this play, and we're finally starting to get follow through here. The market's getting weaker. We made a new low on RSI. We're getting that more defined crossover from the sell signal. So you had the original sell signal, you had the back test, and now we're getting that defined sell at this point. We have plenty of room to oscillate to the downside. And now with the we're getting official, as of last week, the close, we're getting our official crossover sell signal from the MACD with negative divergence here. All right. This is a pretty big signal here on the weekly time frame. This is where we get into that more day-to-day action. While the monthly still needs time to play out, the weekly is finally turning. All right, for SPX, let's change over the board here to the weekly. All right, as well, we have a channel that we're trying to see if that works for us, and nothing else to look in that. Okay, we have our moving averages. Again, fighting with that 8 EMA, just barely holding on. The same concept. I think we're coming down to this 20-week moving average. It goes along right with these lows here. And then I think we'll probably form a head and shoulder pattern with the left shoulder, head, right shoulder over here. And after that nice big bounce, we reject back off of it, probably get a wick, back off of that 8 EMA, and then start to fail from there with a much bigger move. DMARC. DMARC, our 13 exhaustion sell signal actually came a week before, but you know, the tail that wags the dog, the tech market is in some ways, shape, or form more important when it's the only thing holding up the market. It's the most important thing there. So we got our reversal topping signal on SPX a week after, along with QQQ. So this gave the early sell signal, brought us up a little bit higher, and then NDX gave us that, or QQQ gave us that sell signal. And for the RSI, again, here's your negative divergence on the weekly time frame. And then on the slow stoke, same thing. We had the divergences happen. We get that fun. Here's the whipsaw sell signal, right? And then we had our actual sell signal here with a back test. Couldn't follow through back up here, and now getting that crossover back lower. That's a little bit more defined, a sell signal. And here we go. You see that red histogram right down there when I highlight this? That's our official sell signal on SPX on the weekly time frame. Okay, so let's go. Let's just check out DJX just for the heck of it. There's your historic trend line. So we had a possible reversal here, and then we had the exuberant play here. It kept the market up for just a little bit, and then a huge reversal wick there off of that same 2007 trend line. So not looking too good for the overall market and the Dow Jones. And let's go to SPX on the, well, you know what, let's do the VIX on the weekly time frame so we can once again reiterate where we're at. Now, we're looking for the lows, the weekly dominant cycle lows here in the beginning of January, mid-January. So mid-January, anywhere around this time frame, it's actually a large window. So it can be the end of January, it can actually be the beginning of February for that. I think we're going to see a sharp move to the upside. And then as we play into the beginning of the year, we're finally going to get a larger bounce coming up into a dominant cycle. Okay. At this point, we're going to get our first possible wave. And then we look for a big pullback into a wave 2. All right. And you have to think inverse on the market. And then we get a nice brand new weekly cycle where our wave 3 to the downside is probably going to be pretty devastating, while the VIX is just probably breaking out and making new highs well past 60 in this dominant cycle. Okay, so just want to show that SPX on the daily time frame. And the best thing I want to look at this, obviously we have this equilibrium that we're starting to form, and they're not valid trend lines, but it's still giving us a kind of triangle. Maybe we play around in here for a couple days and their catalysts give us a move to the upside or downside that break this equilibrium. That could be, or we could get our move first, and then when we get down, possibly, I'm biased to the downside, and we get to the bottom of this range here in a possible head, left shoulder, head, right shoulder. Now I know this is, it's going to be lopsided head here, but then we're coming back into those historic trend lines that I was talking about, the 20-week moving average and a possible neckline there. Maybe we do that first, and then we get our earnings and we get the data. So all that news. And then we get our nice bounce. After that, I'll be looking for a failure. Moving averages, we already went through all this, so we're holding on to the 50 so far. The biggest thing I want to look for is for the McClellan summation. All right, and it just complete weakness so far. So you see, when you use this indicator, it doesn't have these extremes on there. I made these according to historic moves here. So we're into this buffer zone, this kind of neutral area. It's your bull bear line that I have here marked at about 1600. And the original line is at 1000, which would kind of be that zero line for anything else like the MACD or something like that. And so we're right on that neutral mark where are we going higher? Do we bounce higher from this point and breadth starts to get stronger and we continue to move higher? And you should see that reflect in the breakout of this equilibrium here. And so you should see, the Dow Jones, you should see the small caps and mid caps start to participate in that move, which will give us wonderful breadth and increasing breadth to the upside. Now, with the chart that I showed you with the Dow, does that look like a situation that's likely? I don't really think so. I think this is going to continue to oscillate lower, not in a straight line, clearly just like any other move. We're weak here. We're at all-time highs. We're 1.5% off of all-time highs. We have this negative divergence here. The only stocks that are holding up are the large cap stocks. So if we want to continue to move higher, but the breadth is still low and not increasing, you're going to have NVIDIA really take charge and create that order flow with the other tech stocks and some of those ones that have been beaten up. You're going to need NVIDIA and Meta to come back to life and Microsoft to come back to life. Those have been hit pretty hard and really lead this market higher in order for this to continue this trend here. Otherwise, those names need to reset. And then maybe reset, head all the way down to the extreme bear somehow, and get this market moving again. Right now, we're just not in a position for strength. Okay, so even with NVIDIA coming up, it might gap, but I'm going to expect a gap and crap up if that's what it decides to do, is gap up. All right, let's go to the. We don't need to look at NDX at this point. It's the same situation. Let's pull in IBIT real quick. And I'll go through much further analysis on the regular basis there. But here's our look right now, and I think this channel is going to work out really well. So there's two ways that you can look at this. Obviously, right? That's what happens. You have a bull look and a bear look. And for members, you'll get that Elliott Wave account. Already put it out there, but I'll do it manually here for you. I think it's a 1, 2, 3, 4, and 5 wave move complete. Okay, and that means that all of this wedge was the entire move, negative divergence, breakdown. We get a back test and we continue lower. From the bullish stance, you're looking at this channel. You want this channel to hold. You have nice points down low. I know it's not perfect. I can match them up with this as a fake break. You get the idea. But you hold this area, and this is a good support and resistance. You see how it came up here, gapped up, resisted, and gathered support once again. Well, this will, in my opinion, act as support. You might get a dip underneath it quickly, but you'll want to see follow through with a couple days with a breakdown directly from here. But we have positive divergence and such. And so if you're a bull, you're looking at this as being the top up here, and then an A, B, and C flat pattern, and we go higher from here. Okay. I don't think that's the case. I think it's the top is here. We have a nice 1, 2, 3, 4, and 5, and you're done. And now you have your first impulse wave down, a 5 wave move here, which is getting thinner, more of a wedge. So you have this bullish falling wedge. We get this nice back test of the wedge. It doesn't have to come all the way up to it. You should see a 50-60% retracement, and we head lower from there. So that's where I'm at with IBIT. For all of you Bitcoin crypto traders, that should help out. We should see a rebound of some of those moves. Even MSTR, Master, the MicroStrategies, should get a bounce at this point. Okay, so we'll go to the VIX. Enough there, and I really appreciate you all being here. And I had it on the monthly time frame still, so let's revisit the VIX and see. There we go. Sorry about that. So once again, all right, in the weekly time frame, we have the cycle lows. That's where this kind of saucer, well, actually it's a cup and handle, right? So you have your neckline here, and we see that's been playing out really well, this 22 point. We draw a neckline right here. We can also have some sort of, anyway, you draw the neckline here. So you have your cup, and now you have your handle. And we're looking for this to end up playing out here really soon, get another spike. And we have downtrend lines here. I think we'll probably visit that downtrend line and reject off of it once again. But this nice bullish setup into the cycle lows here. We're going to peak in this cycle, come back lower, and then we'll look for that cycle to repeat along with that monthly time frame. And we are in a monthly rising phase, okay? Just so you are aware. All right, so let's go down to the daily now that we have our real weekend analysis on there. And you see the downtrend line in the near term. I do think that that's going to reject first. We get into this equilibrium here, and we end up breaking out from here, and we could hit again a downtrend line coming up here. And we don't have to hit the full length of it. We can come up to maybe 45 or so, maybe just a new high. We don't know that. It'll move so fast. You'll just have to be ready for a breakout, though. Okay, and so here's your moving averages. We're holding on to that 50. That was the important area for us. We're really looking at that 17 line and that 50 moving average, and we broke out from there. We're back testing this 100-day moving average, or excuse me, the 200-day moving average, and that's going to be important. We might get a little bit of follow through back to that 8 EMA on Monday, and then we head higher along with the support here at 19 that we're above. That's possible, or we could go directly, maybe start off here and start directly Monday into Tuesday higher from there. I don't think we're going to go much lower at this point. We have the 8 Momentum is up. Trend is up. We're above the 50. We're above the 200. It's all looking bullish here. And then after that spike here in the daily time frame, we'll be looking for a nice pullback. Maybe all the way back to this trend line here, into these cycle lows. That should give you that bounce in the market, and we'll be looking for another rising phase for the VIX after that, which would bring us to a breakout at that point, where we should have a much larger wave to the downside on SPX. Do you see how that matches up together? So we kind of bring these both together in order to give us our analysis. And I love matching the VIX with the SPX. I know that they're inverse, but they do have different readings that allow you to work through some of those. When SPX is looking kind of vague, then you look at the VIX and it's like, oh, it's in a bullish stance. So how bullish can we be on SPX if the VIX is bullish? So that will only last so long. Okay, so let's go to SPY and just give our game plan on the 65-minute for what we're looking at. I think this is the most likely scenario, and I know I spelled it out for you already. Here's that equilibrium in the dashed lines there. Here's a possible neckline for the head and shoulders, where you have your left shoulder, head, and right shoulder later on. But we have what I'm looking at is an expanding move here. And so that's really difficult to count. Now, there is a much more bearish count. I left that for members, and I'll get all those nitty gritty details for the individual stock members. I'd love to see you in there. And I can explain to you the other ways of looking at the market. But for now, this is the primary one. So this is all we should need to show at this point. Okay, but here's a 1, 2. These are all 3-wave moves. 3, expanded flat for 4, and then we got our A, B into a 50% retracement. So that could be well done. And what I explained in the members video was that this and the lower time frame, the 15-minute, looks like it could be a flat pattern B wave, and maybe so this B is not quite done. So maybe we go up to this 677 and extreme, which is very unlikely for a zigzag. All right, this is not a flat pattern. This was a bear trap. So that's what gave us a huge move to the upside for that move. This one came up to 50%. This is a zigzag, A, B, C lower. So it's very typical to reverse off of that 50%, even a 382. And it gets a little bit more rare to go up to the golden pocket, and then even less likely to make it to the 786. So it's highly improbable. We'll have some call or protection here. Going to 680, we already talked about that in the last video. So it's already established. We're there. We're protected to here. And then we'll add on some puts into this golden zone. We're already initiated our trade at this point, swings to the downside. And then we'll look to add right here. And then we won't add up here, but we'll take off protection at about 680 if it makes it up there. Okay. And then obviously if we start breaking out, then we get stopped out of our trades. All right, so at this point, we're looking for an A, B, and then we'll look for a C wave all the way down, and then that completes wave 5. 1, 2, 3, 4, and 5, all the way down to this zone where we're looking for. And that zone, if you can't see on the screen, is around 650. We'll say 650, but it can dip all the way down to 645 where that zone is. So just be cautious of that. If you see us breaking down here, don't start adding puts at that point. Watch for at least a reaction off of there, and then see what happens with price after that. But I know I'm getting ahead of myself, but if we start to get some bullish action here, if you see positive divergence on some of the big tech names, on MAG, the MAG MAG ETF, you start seeing positive divergence, you want to cautiously go long here. That's what I'm going to do, and we'll be looking for a larger retracement. So this will be your first initial wave 1 to the downside, a nice ugly expanded wave one, expanding leading diagonal for one. And then we'll be looking for that wave two, probably back into these retracements here. And also, if you're an Elliott wave type person, you'll see this triangle. If it breaks down, then we're going to go test that triangle. That's typically what happens in those equilibriums like that. All right. And so when that's all said and done, what you're going to do is grab your retracement tool all the way down to wherever it decides. I'll just say right here at 649. And you see where those retracements are? Just about at the same spots. So right in the middle of that triangle. All right, so that would not be unusual to hit that golden pocket right back up here to the middle of that triangle. That would be your test. It doesn't have to. It can come to the 50%. And then I bet you that your 8 EMA, or not your 8, your 20 simple moving average on the daily time frame will be right at that point. And remember, the 20-week moving average is right around here. All right, that's my analysis, you guys. I appreciate you being here. I hope all this information helps. If it does, hit that subscribe, hit that like button. Join us in each and every day with that notification bell. And I like to update these charts every single day for you. And join us in the Discord, and we can talk real time on these movements. And intraday, when something's happening, we're chatting in there, and we have a lot of great traders. Don't take it from me, take it from a consensus of all these wonderful traders and their different ways of trading and their indicators. And we even have an education center there with their indicators on it. They've been helping me out so much. They've been helping us out. They've been helping. It's a community in there. We'll see you next week.